All right, welcome back, guys. So here we are starting to actually close out our books now. So when we say close our books, that means we are going to be closing out our temporary accounts. If you guys remember from our lecture last week for chapter 13, right? We're going to take every single revenue and every single expense account, and we're going to close them out to the income summary. All right, so the last that we finished, right, we finished up our financial statements. So now we're going to go ahead and start closing out our temporary accounts. So here, just showing you here, all you need is just your journal and your ledger. Now we're going to do this side by side because it's just easier and quicker to close out each account. So we're, like I've mentioned before, right? Let's go ahead and take a look at my equity account so you know exactly what I'm talking about. All right, so if I go to my equity account, we are going to be closing out to the income summary, okay? So what this does is, okay, it's to kind of, it's to properly journalize your profit and loss, okay? Income summary kind of gives you exactly what the account says, right? A summary of whether you made a profit, net income, or a net loss. So what this does is it allows us to journalize it in a way to actually convert our profit and display it onto our actual paper. So as we've mentioned, as we've completed the profit and loss statement, right? That's just us throwing in and creating a report off of the information that we saw. Now this is where we close it out so we could start our brand new accounting period at zero everything. So zeroed out all our revenues and our expenses so we could start fresh and start clean with our sheets. And what we're doing here is we're converting all of the information and we're transferring them into the income summary so then we can reflect that we made a profit and be able to drop it right into our equity so we could reinvest into the company and change the value of our equity. Okay, so as I've mentioned before, this right here, this little space right here, definitely not enough space to go ahead and close out all of our revenues, okay? Because as we mentioned before, how many revenues do we have? We have quite a lot, okay? A lot of revenues. So in this case, right, we're going to go ahead and close them out one at a time. So we're going to start out with our revenues. We're going to close out all of our revenues to the income summary. Now, let's go ahead and draw the line here because, once again, we don't want to have any room for people to fraud or people to add in their own information in here. Okay, so here, I'm going to go ahead and draw a line between the very last 5 lines here. And I want it to be thick, okay? So that when you lock your Excel sheets or protect them, right, and you distribute them to people, right, they can't go and fix it, whatever it is, okay? All right, so they can only just view it. All right, so that's there. So that means we're going to start our closing process as of page 24, okay? Now, when we understand how to close out our revenues, what we're essentially doing is we're zeroing out every single account. So in this case, right, when we journalize our revenues, what do we normally journalize them as?
Sales.
Okay, I meant like debit or credit. We normally always credit our sales account. So in order for us to zero out our revenues account, so bring them back down to zero, we're going to debit each sales account into the income summary. Now, of course, let's take a look at our accounts, right? Most of them are indeed going to be credited accounts, right? And then we have a few here and there, right? Our sales discount and our sales returns and allowances, those are debit accounts. So those ones are going to be credited. But in this case, majority of these items are credited right now. They have a credit balance. So what I'm going to do is I'm going to go through each and every single account and I'm going to zero them out. Now, so for the very first account here that we have, right? So I'm going to go ahead and make my adjustment date, so June 30th. Now let's see. My very, very first account that I will be zeroing out will be, let's see, my sales for regular coffee. Now in this case, it is a normal, right now, has a credit balance of $13.94.96. Now, if I am to close this, right, if I say I'm going to be closing this account, right, and I'm on General Journal 24, okay, how do I make this account balance out to zero?
Debit. Do we have to add it to the debit?
We're going to be adding it to we're going to make it a debit. So in this case, what total am I going to put in my debit side to make this reflect as zero?
$13.94.96.
$13.94.96, and there we go. Now that is zero. So that's exactly what I'm doing. I'm going to zero out all of my revenues accounts, and then we're going to do the same thing out to our cost of goods sold and our expenses. So here, let's go ahead and go through each account one at a time. So I'm going to go from ledger to my journal because, instead of going through every single one, might as well just, do one at a time, right? So then we can clear them all out one at a time. So in this case, I am going to debit my sales for regular coffee, right? And this is account number 450, right? That's my very first one, and I'm going to debit my account for $13.94.96. Okay? That's my first account that I zeroed out. I'm closing each account. So in this case, that was my very first one. Okay? Let's go ahead and do the second one. So the second one, what amount do I need to do to zero this one out?
$14.36.40.
$14.36.40. Okay. And that's going to make my account balance zero out. So in this case, this was sales Supreme Coffee. And that was account for 4100 for the 1436.40. 1436.40. Okay. So as I'm going through the ledger, I'm zeroing it out here and I'm putting it in my journal. So then I don't have to go back to my ledger to have to zero it out. I'm doing it as I go. Okay. So there we have it. Okay. I closed out that account. Next account I have here is going to be my sales for the ceramic coffee mugs. So I'm going to close this one out. All right. So what amount for my debit do I need to have in order to zero out this account? $17.63. $91. Okay. So there I post it to the ledger. So then now I'm going to post it to my journal. So in this case, I have 91 in my books. Okay. Anybody else have 89?
No, 1763.91.
Okay.
1763.91. Yeah. Does the balance match, Melinda, like for the last 3 numbers?
Yes. Yeah, I got it now.
Okay. So I have here, I'm going to zero out my ceramic coffee mugs for the 1763.91. All right. Is everyone good?
I just need like a 1 second. And then for this, I'm catching up with the regular coffee and the Supreme. We're just putting close and then debiting the amounts, right?
Correct.
General Journal 24. And then we would debit. Okay, I'm good now.
Okay. So let's see what is next. We're going to be closing out our sales medium regular coffee for account number 4,300. Okay, so here it's the 30th. We're closing this account. Okay, how much do I need to debit my account to make this 0?
$5,221.76.
Good. Okay. All right. Now that's a perfect 0, I'm going to go ahead and debit my sales for the medium regular coffees. Okay. For a total of 522,176. Okay. So then let's see what the next one's going to be for my sales large regular coffee. 6:30. I'm going to be closing this out. Okay. All right, so in this case, what am I going to be debiting my account for?
6503.25.
6503.25. Okay. Okay, 6503.25.
No sales regular. Right.
6503.
6503.25.
Mm-hmm. Okay. Next account we have here is going to be our sales for the medium supreme coffee.
For the 6655.77.
665577. So sales for the medium supreme coffee. For 665577. Okay. Next one we have is the sales large supreme coffee. Count number 4500. So again, 630. We're gonna be closing this account. How much do we need to debit to close this account?
7524.44.
Okay, 752444. All right. And this is sales large supreme coffee. Account number 4500 for 752444. See what the next one is. So in this case, we have sales returns and allowances. Okay, so this is a debit. So we know we're going to credit this. So let's skip this account for now. Sales discount, we're going to have to skip for now because that's also a credit. So in this case, we have sales, or I'm sorry, delivery income. And let's see what else. And that's it. So let's go ahead and put the delivery income in there first, and then we will go back and do the other two. So 630, closing. Okay.
for the 300.
So we're gonna close delivery income. Account.
Question.
Mm-hmm.
Now I know this is out the blue, but so when we were doing our accounts receivable, when we're doing delivery income, but we didn't get paid for delivery income, does that matter?
No, it doesn't matter because remember, we're on an accrual basis. We recognize that we completed a task, whether we got paid or not.
Okay. No. I was just thinking for when we were doing the cash on hand yesterday. I'm like, yeah, we did put that down, but we didn't receive payment for it. So okay.
Yeah, because in this case, we didn't say that. Oh, every time we deliver, we want we want cash on delivery. So in this case, we said, okay, we'll just have you owe me the whole grand total.
Okay.
Mm-hmm. So delivery income, which was account, I think that was
48,000.
48,000 for the total of $300. Okay. Now we can go ahead and go back up, right? Because we just skipped two accounts because these are credit accounts. So in this case, now our first credit that we're going to see is our sales returns and allowances. So sales returns and allowances is going to be our first credit here. Okay. And that's account number 500. Or I guess 45,000. Okay. And in this case, how much is my sales returns and allowances for?
1,979.
Okay, so here,
No, that's wrong. 1996.
1996. Oop, wrong side. 1996. All right, which should bring my account balance to be 0. Okay. So here we have it. Sales returns and allowances account number 45,000 for my credit balance of 1996. Okay. All right. Last but not least, we have here is going to be our sales discount. Okay. Our sales discount, right? We've been giving our sales discount to our grand opening and for also customers who owe us money. So in this case, we're going to be closing this account out. So how much should my credit be?
1,997.
1979. I have 79. You have 97?
We're on 79. 79.
Okay. So 1979, which brings my account balance down to 0.
Can you give me? I don't think mine's is formulated.
What do you mean by that?
Oh no, it went to 0. Okay.
So this is 46,000. Okay, for the 1979 cents. Okay. Last but not least, right? We're closing out all of my sales out to our income summary. So let's go to my let's take a look at my revenues one more time. Everything else, everything in my revenues account is all 0. Okay, That's what I want. That's what I'm trying to do, is make sure that every account is closed out to 0. And where I'm going to close them out to, I'm going to close them out to my income summary. Okay, so my income summary is right here. So if I'm going to be closing out to income summary, I'm going to be crediting my income summary, which is account number,
39999.
okay? Now from here, I need to now solve for what my total amount is for my income summary. So you could do this on the side. You can do this. You could enter your formula equals sum, right? Your debit column minus, oops, minus out your equal sum of your credits. Okay. In this case, I don't know. I can't do that, so I'm gonna no. So what I'm gonna do, I'm just gonna do on the side. So I'm gonna,
Did it give you a number or no?
I know I didn't get a number. My formula
Oh,
is not working. So I'm,
28, 879, 74.
what was that?
28, 879, 74.
Yes. Correct.
Yeah.
What was that? 2 9.
879 and 74 cents.
Okay.
And the reason that formula doesn't work for you is when you only have two numbers, you can't have the colon. You got to put the plus or the minus. So when you do the equal sum, the first part will be okay, but you'll get a number value error if you don't put a plus minus times or whatever, like between the 19 and the 1900. But that's
Okay.
why that.
I use a semicolon.
Well, yours is 365, so it might do it differently.
Ooh, good point.
Yeah. So, but I know with this Excel, like with this, you have to put those in. I learned that actually 2 weeks ago.
All right. Awesome. Okay. So I got 2887974. So now that we have that total amount here, go ahead and plop it right into your ledger. So again, I'm going to write June 30th and I'm going to say closing out all revenues. All right. Post reference once again is General Journal 24 and I credit my account for 2887974. Right? Let's see. Okay. I'm gonna tell you right now, this space right here, you unfortunately you'll be off by like 4 accounts or 4 lines. So in this case, what I'm gonna do is I'm gonna have you guys go to the next page to do it because I like to keep all of my accounts together in one page. Okay, I don't like to break my transactions. So what I'm gonna do here is I'm gonna draw another line in here. I know it's a waste of space, but I don't like to break my transactions up, and you're not. This is not enough. Okay, so here. All the way down to the bottom of this page. Right? Okay. So once again, this is now I need to close out all of my my cost of goods sold and all of my expenses. So I already know cost of goods sold plus cost of materials. That's already like eight accounts, plus all of the expenses I have to close out. So this is definitely not enough space. Okay. So in this case, right, we're going to be closing out all of our expenses to the income summary, right? Okay. So in this case, right, when we understand how the expenses, right, how are they normally journalized? They're normally journalized with what kind of account balance? With debits, correct. So in this case, where we're going to be zeroing out every single account, we're going to be crediting all of our accounts. So in this case, I am going to be debiting my income summary, all right? So let's go ahead and place it in here that my income summary is going to be first, okay? For account number 39999, okay? Now what I'm going to do is I'm going to leave this column blank because it's just easier to just equal sum all of all of your expenses. So in this case, you're fine just to leave this blank because we don't know how much the income summary will be. Just like how we solved up here, right? We didn't know what our income summary is going to be until we calculate our equal sum and subtracted out our other two right there. But that's what we're going to be doing here. Same thing here. We're going to leave income summary there, and we're going to go straight into our very, very first expense account, which in this case is going to be my cost of goods sold for the regular coffee. Okay, so in this case, this is 5,050 or 550. So let's go ahead and take a look here. I'm going to be closing out this account. So 630, closing. General journal number 24. And for what amount am I didn't even do anything. I didn't, that thing keeps popping up. So here I am. Okay. And how much do I need to credit my account to bring it down to zero?
1374.87.
Okay. Right, 1384.87. 1374.87. So here I'm going to be crediting my cost of goods sold for my regular. Okay. And this is account number 550. Okay, and I'm going to be crediting it for 1374.87. Okay. So let's see what my next account's going to be. My cost of goods sold for the Supreme coffee. All right. $630. Closing. Okay. How much do I need to?
1450.83.
1450.83. So just like that, I'm also going to be cost of goods sold. Count number 5100 for 1450.83. Let's see what next account is next. We have the cost of goods sold for the ceramic coffee mugs. All right. How much am I going to need?
1183.84.
1183.84. Account number 5150 for the 1183.84. 1183.84. Okay. Next we have is our cost of materials. So here the first one we have is cost of materials for the medium coffee coffee cups, excuse me. So here 630 we are going to be closing. General Journal 24 for the total amount of
286.70.
Isn't it General Journal 25?
oh yes okay, well that's a lot to have to go back to fix, but yes, it's going to be General Journal 25. Okay, well, you 28670. All right. Next one that we have here is our custom materials for the large coffee cups. Okay.
For the 351.63.
$35163. Okay. Next we have is custom materials for the sugar. Right? For a total of $43.20. last but not least, in my cost of goods sold, I have my creamer.
For credit of 359.26.
For the 359.26. Okay. Good. So let's go ahead and go up and take a look here. All of my cost of materials are zeroed out. Okay. All of my cost of goods sold are also zeroed out. I'll fix all these. 25. Oops. All right. And my cost of material, cost of goods sold for my regular coffee is all zeroed out. Right? Now, of course, what I'm going to do is I'm now going to continue because this is part of my expenses, right? Cost of goods sold is just a separate entity because it deals with inventory directly, right? But in this case, I'm going to go ahead and connect it together with my expenses as well because they're all expenses. So I'm going to go ahead and zero out every single expense account that I have. So that's exactly why that journal did not have enough space. Okay. So let's start with the first one. My first one I have here is going to be my advertising expense. Okay. So here I'm going to close out my advertising expense. All right. I need to close this out by how much?
85.
185. Okay, so here account number 60,000 for a credit of 185. Okay. All right, next one I have is my bank fees. Okay.
For credit of 369.64.
Ooh. 36964.
36964, yes.
All right, I'm going to be crediting my bank fees. Account number 60100 for 36964.
Am I the only one doing this right now? Did everybody do it before class?
No, I'm doing it now.
Oh, okay.
Yeah,
I'm trying to keep up with the typing.
Okay.
Okay. Next we have is going to be business expenses. 630. Closing.
For the 1282.78.
128278. All right. Count number 6200, which in this case we're going to be crediting for 128278.
Oh, freight expense, we don't have anything for freight expense, huh?
Nope, so it's already zeroed out, so there's no need to re-zero it out again. So it's
No, we
it's
didn't.
gone. Then we move on to insurance expense, correct. So here we are, insurance expense 630. Closing.
For the 195.83.
Mm-hmm. Oops. Whoa, excuse me. 195.83.
Yeah.
Okay. What's next?
Subcontractor expense.
Subcontractor expense. Good. So here we are. 630. We're gonna close this account.
For the 1890.
For 1890.
Next is a temporary labor expense.
Mm-hmm.
For 252. Next is license and permit. For a credit of $375.
Okay.
Do we do loss on disposal of asset as well?
Mm-hmm. Every single expense account.
Oh, okay, okay. For a credit of 2,000.
Quick question. We're on journal 25 or 24?
25.
25.
Oh, okay. I gotta go back. But thank you.
That's okay, Felipe. You can just leave it.
All right, all right.
Linda warned us earlier, that's why I went back and fixed all mine.
Oh yeah, I'm just like I keep putting. I'm like, wait, and then when I went back to my other sheet, I'm like, oh wait, am I in the wrong sheet? All right, thank you.
Mm-hmm.
Office supplies expense. For a credit of 70. Salary and wages expense. For the 884. Commissions.
Commissions, okay.
For a credit of 411.96.
for $411.96.
Payroll tax expenses,
Payroll tax expense, okay?
for a credit of 97.98.
For $97.98.
Purchase expenses already zeroed out.
Purchase expenses zeroed out, good.
Purchase returns and allowances zeroed out.
Yes, it is.
Looks like we'll go down to rent expense.
For a credit of 1,500.
All right, for 1500.
Bad debt expense. For 76.60.
Closing.
I'm sorry?
Oh no, I'm talking to myself. 25 for 76.60.
Yes.
For 76.60, okay.
Depreciation expense. For 625.95.
$625.95.
Mm-hmm.
All right. Last but not least,
Amortization expense. For a credit of 11.67.
for a credit of 11.67. So amortization expense. For 11.60. 1167. Oh, I think we forgot to put its description up here too. We can go ahead and edit that and fix it too. So since we reached the end of all of our expenses, go ahead and make a little description here to say that you're closing expenses out to income summary. Okay. Right. So here, like I've mentioned before, right? All of these are all credited accounts. So here's simple as it can be. In here, you're gonna go ahead and do your equal sum formula to tell me how much total expenses you have incurred.
278.74 cents.
15,200 and what, Alan? 78, 74?
Yes.
Okay, that's what I thought.
$15,238.74.
15,287.84. Yes, that's what I got.
87 to
15,278.74.
Is there anywhere that we're missing 1,000, or do we have one that's exactly 1,000? 2,000, I mean.
yeah, loss on sale of disposal of asset.
Oh, okay.
Okay, so I have a typo somewhere.
Thank
You
you.
have a typo somewhere for the number?
Because I got 15,238.
You're just shy of what, 40 bucks.
Yep.
1374.87, 1450.83, 1183.84, 286.70, 351.63, 43.20, 359.26, 185, 369.64, 1282.78, 195.83, 1890, 252, 375, 2000, 70, 884,
844.
884.
Oh, there it is.
There
8,
it
8.
is. There's the 40.
Yep, there's a 40. Okay. Thank you. So there it is. 15,278.74. Okay. I'm going to go ahead and add my description from here from before since I forgot to do it. So I'm going to say close out all revenues to income summary. Right?
It was funny because when we were up there, I'd put that in there, and when you didn't do it, I thought, okay, I'll wait and see.
Thanks, Alan.
So,
All right.
yeah.
What was that? Close out all revenue to
Income summary.
income summary, okay.
Yep, that's it. Pretty straightforward.
Well, you just got me in the habit of putting a note on for everything except like the obvious. You know?
Right.
So like I just put the note in, and when you didn't do it, I'm like, well, maybe she's gonna put a bigger note down below or something.
No, no. I mean, you could. I mean, I could have, but at the end of the day, like, I mean, if you want to, you don't have to. All right. So now, last account that we haven't edited is going to be my income summary. So let's go ahead and plug in my number here. All right. So this is closing out all expenses. Okay. General journal, this time 25, not 24, okay? And this time I'm debiting my account for the 15,27874. Okay? Right? In this case, right, because it's an equity account, its normal balance should be a credit balance, okay? So here I'm going to put my formula as I'm going to add my credits and subtract any debits. And here, what do you know? Where do we see this 13,601? Where do we see this 13,601?
I'm trying to catch up. Okay. You debited it.
I found it. Net income.
There you go. It is the net income that we calculated. And guess what? Guess what's next? We're going to now zero out our income summary to where?
Where's the for the income summary?
Mhm.
What was the equation for the credit?
You're going to go previous balance in the credit, add your credits minus your debits. Because it's an equity account, it will have a normal credit balance.
Oh, I did it twice. Equals balance plus debit minus credit. Oh, no. Mine's just coming up to 44,158.
You're adding credits and you're subtracting your debits.
That's where I'm missing it. Okay, so the balance?
Where's your balance right now? Is it in the credit or the debit side?
It's in the credit.
Okay, so up one.
879.74 minus 15,278.74.
Mm-hmm.
Okay. Plus nothing.
Mm-hmm.
Okay, I'm better.
Yeah, okay, you should have 13,601, which Alan has says is where we solved in our income summary. So in our income statement. So that is another place where we can check to make sure that we are doing our counting accurately, okay? So in this case, we have a place point where we can reference to make sure that we did it right. In this case, we should have a $13,601 profit, okay? Net income. So what's the next step here? Where do we need to zero out our income summary to?
The subsidiary ledger?
No.
Income equals equity.
Okay, income equals equity. So what are we going to do here? Where are we going to zero out our income summary? Felipe, say it again.
I'm thinking, and it's a short day with a long thinking time.
Assets?
No, not assets.
Could you go back minus equity?
Oh, that's. I think he could.
Yes.
Okay.
You're going to zero out all of your income summary and plop it right into the owner's equity, right? Because that's exactly what we did for the income statement, right? when we saw for the income statement, when we did our statement of equity, what did we do? We took that amount of profit and we added it to our equity. So in this case, right, to properly reflect that is happening, what are we going to do? How do we zero out our income summary?
We're going to debit the income summary and credit the owner's equity.
Right? Close out to equity. General Journal 25, since we have plenty of space. And we are going to be debiting the 13,601. All right. Which then makes this account 0. So that's exactly what we're going to do. In our journal, we're going to debit my income summary. For the 13,601. All right. And we're going to credit it into our owner's equity. So when you credit your owner's equity, what does that mean?
You made money.
Yes, but in context of debits and credits, what does it mean?
You just leave it in the business.
No, in terms of debits and credits, what does it mean when you credit owner's equity?
It's a gain.
Gain, an increase. Yes, so therefore we increase. Yes, we increase our owner's equity because we have a profit. So in this case, right, we're going to credit our owner's equity for 1301. Okay.
601.
13,601, excuse me, thank you. Yes, and my note here in my journal, I'm going to say close out income summary to equity. Okay. So in this case, right, I'm going to go to my owner's equity account and I'm going to place in my income summary. By 13,601. So then therefore, what is my current balance in my equity account?
43,601.
Yep, correct. Okay. 43,601. All right. That's how we close out all our sales or our revenues to an income summary. Then we're going to close out all of my expenses to the income summary. And then the last step I have to do is close out my income summary out to my equity account. So there we have it. There's my profit of 13,601. And here I'm reinvesting it into my equity account. Okay? All right? So now my equity is supposed to be 43,601. But what other contributing factors do I also need to be aware of to update my equity account?
Owner's withdrawal.
Owner's withdrawal. So here I'm also going to be zeroing out my owner's withdrawal out to my equity. So in this case, right, I'm going to go and close this out to my equity. So I'm going to say closing. Okay. All right. So in this case, how much do I need to close out my equity account? I mean, my owner's withdrawal account.
3,000.
We need 3,000. So therefore, I'm going to credit my account. If I'm going to credit my owner's withdrawal account and I'm zeroing it out to my owner's equity, therefore, I am going to be debiting my owner's equity. Okay? Because I am decreasing my company value. Okay? So owner's equity is 30,000. My withdrawal is 32,000. Okay? And I'm closing out a total of $3,000. Okay? And of course, I'm going to also make a note here that I am closing out withdrawals to equity. All right. So let me go. So here I've already credited out. I zeroed out my owner's withdrawal. So now all I got to do left is come up here and add my owner's withdrawal. Right, I'm going to be debiting it for $3,000. So therefore, what should be now my total balance in my owner's equity?
40,601.
40,601. And where did we see this number?
On the owner's equity?
In the statement of owner's equity. Yes. So there we have it. And that's it. We're done and we closed our book. So perfect here. I reached the end of my book. So again, if you go forward, there's no more pages. So you should have finished on the 25th page. Okay. And yes, so if you want to go ahead and put that little bar there to indicate that the books are done, closed up, and everything pans out, it is even. Right? Close the books. Okay. And we are done with step 9. Okay. Okay. So go ahead and save your work because now we got one last thing to do, right? Our post-closing trial balance, which right now it's 3 o'clock, so I'm going to go ahead and stop here, and then we'll go on a break and come back and finish up the rest, okay?